Hello, this is Megan Horneman, the Chief Investment Officer for Verdant's Capital Advisor, coming to you today with our regular segment of Markets with Megan. And we're rounding out this week with a pretty disappointing report on consumer confidence. This is consumer confidence as reported by the University of Michigan Consumer Sentiment Index, and it is consumer confidence for the beginning of November. So we will get a final reading at the end of the month. But what this shows is that consumer sentiment, not only in the current conditions, but also future expectations declined. Current conditions declined the most. Some of the other details within the report are sentiment that the individual's household income will beat inflation over the next couple years. That's near a 10-year low. When you look at those consumers that were surveyed, those that are saying it's a good time to buy a house, that's near the lowest we've seen since the early 1980s. And then also whether it's a good time to buy a major household item or an automobile, these are also declining as well. This isn't surprising because interest rates are very high across the board for loans, whether it's credit card loans, whether it's mortgage rates, whether it's auto loans. This is, concerning from the consumer standpoint. It's starting to be felt. But the main takeaway from this report is the University of Michigan also surveys inflation expectations. And this is going to get the Federal Reserve's attention because inflation expectations for the longer term, the next 5 to 10 years, they actually rose to the highest level since 2011. The Fed's not going to like that. Yesterday, the Fed was vocal about keeping interest rates higher for longer and that they may have to even raise rates again. So this is something they're going to be paying attention to and may impact what they do at their December meeting. That's all we have today. If you have any questions or comments, please feel free to reach out to podcast@verdants.com. Thank you.